Hi, welcome to the video today. It's the 18th of December, Sunday. Today's video, we're going to be looking at trading trend changes. Now, in terms of this, I want to look at the USD against China correlated currencies. So I'll look at the commodity currencies, so AUD, NZD, and ZAR against the USD. Also, the US dollar against the Singapore dollar, and finally, the US dollar against the Chinese yuan. Now, in terms China correlated currencies, they've had a huge move to the upside based upon optimism about Chinese growth going forward and a couple of other factors. Now, I think the good news is inflation, and the dollar will stage a rebound against them, looking basically for a big trend reversal. Now, I'm going to go through the logic of my views. Just before I do this and we look at the charts, just please keep in mind, it's my view as of right now, it can change in line with market conditions and action. If you want to learn all our trading techniques, check out our daily technical sentiment analysis of 14 FX pairs. You can get live access to our member center on the link beneath this video. Now, live access will shortly end, but you can lock it in now with a discount on membership fee. Details beneath the video. You can also follow us on Facebook and join our Facebook group of traders if you wish. All right, let's go and take a look at the opportunities. All right, just before we go and look at the daily charts, levels of entry, stop and target, I just want to look at the big picture for about 5 minutes in terms of why we think the USD is going to go up on China correlated currencies and the yuan. Okay, now this is USD CNH. It's a monthly chart. Bullish all year, great rise to the upside, but our good luck ended in November with this huge red. We follow on in December. Now, I personally think we are going to recover to the upside. Dollar's going to move higher, and that will pressure also the correlated currencies. I want to look at the most overbought of the commodity currencies. NZD, USD, really big push up. We're at this double top here on the monthly chart, which I'm highlighting. 65 level. Also, if we move back up again, this 20-day moving average will come down and provide resistance. Okay, now in terms of why is the market so bullish of China and commodity currencies? Well, in terms of, I'm sure you've probably seen in the news, COVID restrictions are being relaxed in China. Markets saying, well, now China can return to robust growth. But I don't think that is going to happen. The market's too optimistic. China is an export-led nation. Okay, now in terms of being an export-led nation, bad news is this is a chart of global PMIs. They're basically leading indicators on the health of the global economy. They're in contraction territory. The global economy is contracting. China's export markets are shrinking. Okay, you can see it clearly on this chart here. Container ship freight rates. There's 3 major Chinese routes going south, down 80%. Shanghai, Rotterdam, Shanghai, Genoa, Shanghai, New York. Okay, dropping rates. Why? Because obviously they need to fill ships. Now, Chinese exports will continue to contract. Okay, I just want to go to my next chart, which shows the latest data on Chinese exports, and it's well below forecast. They shrank 8.7% for November. You can see it here on the left, but also imports declined as well, down 10.6%. Obviously, as the economy shrinks or slows up, less commodities are being bought, which obviously will hurt the commodity currencies. Now, in terms of the market, they're saying, well, yeah, maybe export markets are shrinking a bit, but also China can stimulate internal demand. That's going to be very difficult. Why? Because, the consumer in America is 70% of GDP. It's not the case in China. It's just somewhere north of 30%. The internal demand is not there. China relies on exports. And even worse for China is the real estate market collapsing. That's hurting the middle class. It's destroying their wealth. You can see China real estate going down on this chart. And how important is it? It's not just important for China, it's important for the global economy. Look at the size of China housing on the left, near enough 450 trillion. It dwarfs US housing, US stocks, or US bond markets. I do not see China recovering. Domestic demand just is not going to be able to compensate for the shrinking of exports. So I think the good news is kind of in the price. Also, the dollar's taken a hit. You can read this article. It's on my blog, and the link is beneath this video. Market's taken a very dovish view of the Fed. Okay, now this chart is interesting. This red dot here shows market pricing, where they think US interest rates are going to go. Okay, in 2023. These are Fed members, the blue dots. Fed members are more hawkish than the market. And if we go to 2024, okay, there's a couple of dots closer, but all Fed members seeing higher rates than the market. We go to 2025, that's quite a long way away. This one is the most important, okay? So dollar market doesn't see the Fed being hawkish at all, sees them being dovish. I think the bad news is in the price for the dollar. You can go, obviously, did I say read this article on my blog, for other reasons why the USD should firm. Okay, so there's a little bit of background. Now, in terms of the individual pairs, and let's look at the daily charts, we'll start with AUD USD. All right, AUD USD. Now, in terms of anyone new to our videos, our charting is very, very simple. Already got a bias from the big fundamentals and sentiment, so we'll just focus on big levels where we think there's going to be big order flow around. Now, in terms of Aussie, it bottomed out in late October. November, December, it moves higher. I think this red candle here could be the end of the uptrend. We've come in short, you can see it at 67.60. And we're just now below the 67 level, so not too much action yet. How would you play this one if you wanted to come in fresh? I think if we were to go back up towards the 68 level, you could sell. Weakness away from the level, stop behind second level resistance, you can see our stop. Or if we just break the double bottom on the tails, just sell, stop behind first level resistance. You can see here where we'd put our stop, okay? I think the whole rally could be retraced. Now, also, I didn't mention it in my sort of intro, but stock market weakness tends to hit the commodity currencies. And we did have some stock market weakness at the end of last week. That, if it continues, will weigh on the commodity currencies. I did an article on my blog on why I think stocks are going down, which you can check out if you wish. So this one, I think a trend change hopefully is being confirmed. NZD USD, I said earlier, strongest of the commodity currencies. And I didn't think it was going to run on like this. I tried a really aggressive short there and got stopped out both times, okay? Come back in short, and in terms of this one, this poke here at 69 level, we saw it as monthly resistance. Come back away from it, you can see the red already come in, but it's a tiny position I want to add if we break the 63 level, okay? Now, in terms of if we break 63, looking for the whole rally basically to be retraced. You can sell a break lower or sell a rally up towards the 65 level. Just look for weakness maybe off this first level resistance, okay? So hopefully this candle here could be a trend change, but this level here, if it gives way, I think will really cement the down move, okay, or cement a down move. Next pair I'm going to look at is going to be USD SGD. Right, in terms of this pair, if we look at it, break down here through the 20-day moving average, green line, test, down, test, double top into the 20-day, then we don't get near it until now. Big blue, red pause on Friday, just below the 20-day moving average. We could take out the 20-day moving average, look for a big volatile move to the upside. Now, in terms of the SGD, it's not a commodity currency, of course, but it is a huge transport hub with a big exposure to China. It's also very sensitive to the outlook for global growth. Obviously, we're pessimistic, which should weigh on the SGD. Now, in terms of this blue, it's worth looking at the monthly chart, because look at the tail low this month. Go over here, you can line up basically 6 bodies and 3 tails. We bounced from the support level, okay? So we're looking for more strength. If we break out to the upside, we're going to add to our position, okay? If we broke out to the upside, I think we'd move our stop behind these candles here I'm highlighting and behind the low of the day, okay? If we don't break higher for fresh positions, you could key off this blue candle body and the 2 bodies here come in at a lower level, okay? So yeah, looking for hopefully a breakout. Let's have a look next one. USD ZAR. This is really messy, choppy price action. My own view is if we can open strongly next week, I think the USD is a buy, okay? Not only are we going to get to 1840, I think we're going to get up to 19, which is right up here, okay? If you come in on strength, you could probably put your stop behind the bodies. I've got it at this moment behind the tail, okay? If we pull back to this level, you could come off it on strength. Internally in South Africa, a huge amount of problems. Yeah, very bearish of the ZAR. Now let's look at the last pair, which is going to be USD CNH, which looks a good trade on a breakout. Obviously the USD, big correction to the downside, but now look, just choppy, kind of sideways action. Breakout here, going back to chart highs in my view. On a breakout, your stop could be behind first level support. Presently I've got ours behind second, but breakout, bring it up behind first, hopefully move back to chart highs. So yeah, I think in terms of the market, they want to see an optimistic view of the global economy. And China, a lot of optimism about it returning to growth, just don't share the optimism. We'll see what happens, but I think all the pairs offer attractive risk to reward, so we'll see how they go. Hope you found the video useful. Thank you for watching.